Hey, buddy.
Well, welcome, Pat.
Last
So,
uh, last business day of 2022. Welcome,
yeah,
everybody.
had a little
We
technical
made it through another
difficulties.
year.
I think so. So you can hear me okay?
Yep, I can hear you, Houston.
Okay.
We had a problem there, for Houston, for a bit, but
Yeah, my PC is being upgraded, and my son's helping me with that. And in fact, I'm getting a new motherboard, a new CPU, and so I had to resort to hooking up my Surface Pro and trying a different webcam. And so I've been doing that all morning. And for those that don't know, when Pat logged on, I couldn't hear him. I don't know what we did wrong. So,
man,
but
it's my choice.
we're not too late though. We're only a couple minutes after whatever. But anyway, welcome everybody. Our last show of the year, and we were talking about maybe recapping the whole year, but I just couldn't get around to it. So maybe I just don't want to remember it. But
I think
um,
we probably did it by choice. We didn't want to remember
yeah, that could be it.
it.
So, but I saw some stuff I wanted to share with you, Pat, and because it's one of those things where the headline is actually very optimistic, but the data really isn't, and but it really kind of makes you think a little bit. And I can start out right here by showing you this. This is from the Cromford report. I'll put us down here on the bottom. That usually makes the chart a little bit bigger. And you see how everything's green here? This is the
hmm
Cromford index, which indicates that it's moving more in favor for sellers, right? Especially Paradise Valley, 43% change in the CPI. Now, to um, let's see, what's Tyler? Yeah, know how you love the tech stuff. Yeah, well, I like it when I want to like it. so, but what they're saying here in this, it says this table's quite startling. The market balance is now swinging quickly towards sellers, yet this does not seem to reflect the market commentary in the general media. In other words, the general media is saying the market's really down, it's really down. I got to reading this and looking at it, and I said, well, what the heck's going on in Paradise Valley? So I wanted to do some digging. So I got in, and hopefully I haven't refreshed these in a couple minutes. So sometimes it takes a moment. And I wanted to see what was really going on behind the numbers. And so here it comes. This is the beauty of live streaming. Sales per month. And there it is. This is total sales per month. You can see that it went from 48.44 up to 49.27. So about 100, 120.
hmm
It's not a lot. So then, but this is total market. Now I went and looked, and we'll see this chart's probably going to refresh itself too. Yes, it is. And I did. I paid my cable bill. Um,
A
see, here it comes. Here it comes. So
lot of data.
something about doing this off my. See, I have the same machine that you have. Here it is. Active listings. Now let's take a look at Paradise Valley for a moment here. There it is. And you can see that their listings went from 114 down to 100. So keep that in mind. If we get to sales, this is monthly reporting again. Boy, it's going to drive everybody. You're going to start drinking early now for New Year's just watching this thing spin around. But I believe the sales, so there's only 100 homes there. And it went from 114 to 100. And that was, here we go. This is what I'm looking for. This will shock you. This is Paradise Valley. Sales per month went from 14 to 22. So to recap, you're seeing
That's a
that Paradise
50%
Valley,
increase.
they're yeah, 43% right there, right? So you're looking at this and going, holy cow, what happened? Well, it's only 14, 22, eight homes.
Yeah.
So again, it takes me back to that saying that I always have that says a large percentage of a small number is still a small number. So the chart, if you were just look at that, you would think, wow, things are really turning. Well, they are and they aren't, because today we have only 1,744, 17,442 listings. 1,681 new listings the past 17 days. And listen to this low, only 1,498 contracts, because this has got Christmas in it. So
Yeah.
that's an all-time low for a 7-day moving average, even for a holiday. So there's really still nothing to be optimistic about in there, except I do want to point out one thing, and that is when we're looking at the Cromford index and we start seeing green like this consistently over 3 months and they keep going up, then that's when you really can say that the market is turning and going upwards. But right now, that's just I think a little blip, because December was slightly busier than November. And I think that's because rates kind of went slightly down and new construction had a really good month. And so I think it also underscores and says, as you look forward, as you're waiting and you're trying to figure out how to get in, those are the kind of numbers that you'll see on a consistent basis. And you really won't know that we've hit the bottom until 2 or 3 months after we've hit the bottom, right?
Yep. He's a couple month lag time.
Yeah, yeah. So it says the swing in favor of sellers is most notable in Paradise Valley, Avondale, Chandler, Tempe, Mesa, Gilbert, Glendale. We now have 5 cities in the sellers market zone over 110. So anything around 100 to 110 is considered a balanced market. Anything considerably above 110 is considered a seller's market. But there's just not enough going on there to catch my attention and go, Yahoo! Because there's plenty out there to tell you that the market's going to remain slow for the foreseeable future. And tell me what's going on with rates, Mr. Pat. That had to be a slow week too, but that had to be a slow week as well.
Yeah, give me 1 second here. I'm going to do something here.
Do Vegas. I do have some open door numbers I want to share with you. I'm glad you reminded me. Thank you.
Yeah, I mean, today we saw the market, the mortgage market rates got hit. It was down 50 basis points. I think it was kind of a combination of a couple of things. Last trading day, a lot of times traders will, be weak demand for any type of trading, because everybody's kind of checking out for the next couple of days, and obviously people are closing out their positions. But obviously there was the news about the $1.7 trillion bill that they're gonna be rolling through here too, which is gonna be inflationary. So that didn't help the numbers at all. So we've seen rates creep up. I flipped it around today. These are the rates. These are not prices. So rates have, since about December 15th, they've kind of crept up. I mean, we saw a nice rally in rates from November 7th down through the first part of December. So for about a month, we saw a nice rally, and we've seen them because they were tipping into the high fives, low sixes. Now we're 6.25. They've crept up here. The 10-year Treasury's at 388 from a short-term low of 343. So we're seeing it trading in these these bands. There's some resistance here on this level right here at about 391, 392. So we got next Friday we get the jobs report. They're estimating 200,000 jobs, like an unemployment rate of about 3.7. But Barry's Habib and the mortgage-backed security MBS Highway feels that there's a good chance that these figures come in next week, and it's going to help bonds. So this is basically kind of a run of rates this whole year. You see this this is kind of what we've done starting out. We had the 10-year Treasury.
Well, you and I were talking this morning too about but you and I were talking this morning too, where Chairman Powell had said that normally any tightening that they do takes about 18 months to show up in the economy, but now with the speed of everything, it'll probably show up in 12 months. So that means they started tightening in March. So in March, we should start seeing the the effect of what they've already done this March. So we're going to hit the 1 year mark. That's going to be very interesting to watch.
Yeah.
Are they going to start seeing some results in those numbers?
Well, we are. I mean, Barry. I picked off some charts that Barry was talking about. This is obviously the 10-year Treasury a couple days ago. We've seen this. This is how bonds will trade. They'll trade in channels. You get these stuck in these channels, and that's how you kind of start to see trends. Um, but Barry was talking about the fact that he's seen the fact he thinks inflation's peaked because you've got comparison year over year numbers. Um, we start peaking into this, January and February. Um, right here, December, January is when inflation was peaking. Right here, last year, it was 0.06. So it comes in at say point 0.2, point 0.3, like it has the last couple months. You're going to have year over year numbers look a lot better. And he said too that the shelter costs, like I said, I picked these up off of his year end summary. He said the shelter costs are definitely lagging. This is apartment rents. He says it's like a roller coaster basically, and he said the shelter costs are lagging. This is the CPI. This blue line right here is the CPI rents year over year change. While the shelter costs are coming down, based on the lag effect of in the numbers, we're still showing the inflationary numbers and the CPI numbers as shelter costs have not, built that in yet. So he said these are gonna start changing the inflationary numbers, the expectations. And he goes on to say about housing demand, housing formation. He goes, a lot of people with rates going up, a lot of people are still renting. They went back to renting because of affordability. So he said the formation is down. This is May of 22 when we saw a peak. I don't know, 1.8. This is 1.3 right now. So he said we're seeing, a lot of people have pulled back. They're waiting. He said there's still that's potential demand from the housing. If we see some affordability, come into play. And he went over here. Another chart that he used was a home price at moderation, hardly a crash. He goes up this right here. I know people can't see this, but it says up 115% the last 10 years. And then it was 39% in 2 years. And now it's down 2.5% from the peak, is what they're saying. He goes, hardly a crash. So a lot of stuff in the numbers there.
But they have a target inflation rate of 2%. So they're not going to start pulling back until they see some results from their tightening in March, but they want to see that it's consistent, correct?
Yeah. I don't think they're gonna pull back. When they pull back, they're not gonna raise them anymore, but they're not gonna lower them either. So
yeah.
But I mean, Barry really believes that the 10-year, the spread between the 10-year rates and the 30-year mortgage rates and the 10-year Treasury, the spreads are typically 1.75 to 2. They've been peaking out right now at 300 basis points. So he goes, mortgage rates could change very quickly in the next quarter. He said they will drop faster. So
it's still there, Pat.
Yeah. Okay, I know.
Now, Jackie, yours is behind there. It's hidden.
So. Okay. But everybody's been forecasting. Barry has been forecasting. We'll see rates closer to 5%. He says we'll see a 10-year Treasury at 3% or less in the upcoming the next 3 to 5 months. But he said, the pending recession that we have, these inverted rates have pretty much predicted every recession out there. So it's very negative right now. And he said with the credit card debt piling up and the savings rate coming down, it's the signs are there that it's going to slow.
Yeah, well, the money was sent out to everybody. Look what happened to the crypto market. A lot of these young kids, when they got that $1,400 check, just went out and bought some Bitcoin and other cryptos, and then we started getting all kinds of new coins that just showed up every week, from 100 different coins to 1,000 to and all that money just evaporated. It's gone. There's, there's still some in Bitcoin, but Dogecoin, that's not worth anything. And then speaking of values being gone, Open Doors price is now $1.14, their share price. And
Really?
$1.14. And they have when I look at
Damn, that
the
would have been
number
a
of
good short.
oh, it would have been great short. Yeah, yeah. We knew they were going to go down, but they they have like 998 homes on the market right now, and that seems like they moved some inventory. But when I add back in the number of homes that they temporarily took off the market so they can paint them and stuff, um, it looks as though they haven't moved a thing. Because remember, they're about 1150 to 1200 homes. So you take that 998 plus 182, you're right there. So they
Hmm.
haven't really moved anything. And they did wrote down, not wrote off. How in a business you've got X amount of assets, right? They wrote down the value of their assets by 553 million. In other words, the homes that we hold right now, they're worth 553 million less than they were last quarter. And they have an unbelievable amount of inventory. In fact, if I just kind of look at the um, it's $1.15, Pat. So you might want to get out and get some more of that stock there. But they had uh, it, and I'm not fooling. They said nobody's putting them in their top 100 buys. Um, so so they took quite a bit off the other states. They have 630 homes in total that they own in the country.
How many?
And I saw something 630.
That's it?
No, no, not
Oh,
630. 6,300, but I'm missing
yeah.
a digit. So
Yeah.
it's like talking about our millions and millions of viewers. I just I get thrown off. So,
Yeah.
like this here. So now you can see we actually have 28 million watching right now.
I like
Um,
MD commenting, consuming 89% of the world's internet bandwidth. He goes, you guys clearly killed it this year. Well,
yeah,
we're trying.
we've given, I mean, Cox had completely up to get new equipment just to handle it.
Yeah.
Um, just great, and they raised my bill too. But so anyway, Open Door is when you look at a map and you look at listings of Open Door, and I'll see if I can pull it up while I got everybody on here. But it blows you away when you see how many they have in the city of Maricopa. Something told them that was the place to buy, and they in their quarterly report and what they were talking there on Yahoo Finance, they said that. Their optimistic view is that their losses right now are a direct result of them overbuying in the second quarter. And now they're no longer doing that. So they're being optimistic, saying, because we're no longer doing that, um, things should start looking better pretty soon. But I'm on the screen here so you can see it. And it was pulling it up for me there. Come on, there's the map. Okay. Um, that town of all the towns. So here it is. I'm going to move me over here. Should get on there any second here. Boy, it's just going buggy slow today. There we are. Okay.
Yeah.
So here's the Phoenix area here. Scroll down to where'd it go here? Here it is right here. There's Maricopa. And you start zooming in there. Boy, I tell you, this is the worst connection I've had. And I think it's my computer. This Surface Pro is just doesn't have the
Yeah.
processing power that my other one does. And that one's going to be done in a few days. It will be a beast. But look at all of them. That's not a big town, but they got a lot of listings
No.
sitting out there. And so it's going to be, they're weeding them out. They'll be done. So what did Jackie here say? She says, I think it dropped briefly below, and it did. It got down to 96 cents. And somebody made a comment that OfferPad was like 41 cents. But I'm not a stock guy, Pat. Do you see any reason to scoop up that stock?
No, no, not at all.
Would
Nope.
you
The
you
trend is
wouldn't
your
call that a
friend, and
buy?
it could kill you. I mean, it's like Carvana. It dropped from like 380 down. I don't know where it's at, like 4 or 5. It's like a knife with in the falling butter. So it's not good.
Well, but they've got all these assets, so they're going to file bankruptcy, and then somebody maybe will scoop them up, like But it's a lot easier with cars than it is with houses. So
Yeah,
you
yeah.
know, Carvana can have a big inventory clearance sale, and it's not going to affect the price of cars, in several states. But I just don't know what Open Door's going to do. Um, and we're all watching it like a hawk because they were about 11% of our total listings between 400 and 600,000. So, hey, I've got a couple new ideas coming up for the new year for the channel, and one of them was talking to my inspector friend Dylan yesterday, as a matter of fact, and he agreed that we're going to do a monthly series called "Look What I Found," and because he's got an Instagram channel and he keeps putting up things that he's finding in his inspections. And I said, "Are
Mm-hmm.
you willing to? We'll make a video once a month called "Look What I Found." It'll be entertaining, but it also really kind of underscores some of the things that you should be looking for in an inspection or you should expect. So I thought that'd be kind of fun because he's found things like new construction, the dryer vent flap has been painted closed. He gets up in attics and he finds a truss that was broken. And they just kind of nailed it together with a couple 1x2s. And
Yeah,
so I
something that
hope,
could help. Something that could help people out there. That's we're obviously. I think you and I are just trying to provide some, maybe not a prediction, but just trying to figure out the numbers, what's out there, what people are looking at right now, so they can make them, help them make a good decision in the near term.
yeah, I'm glad you brought that up because for me, the goal of the channel is simple. There's a lot of noise out there, and I just want people to see the real numbers. Like I just showed you what was going on in Paradise Valley. So if you read a headline, you're going to think that Paradise Valley, if you're a seller, man, that's the way to go. But they still only sold 18 homes, and maybe for them that's a lot. But when you hear the home sales are up, 43%,
Mm-hmm.
there's always a devil in the details. So I don't want to. I'm not telling anybody this is a great time to buy right now because I'm kind of nervous. The rates, we started hitting an affordability wall ceiling before the rates went up. So
Yep.
that wind was already blowing. And so we were already starting to see things slow down. What we don't know is what we don't know. We don't know how long we're going to be in this situation. But if we start seeing numbers that start showing up as a trend, then we're going to be able to share that and go, looks like we're going to muddle along for a while, hang tight, or you know what, let's do some bargain hunting. Or hey, look, it looks like it's kind of starting to grow. It's going to be pretty easy to see, I think, on our end because we've
Yeah.
got access to numbers that everybody else doesn't. Now, on the Thursday show, we put that on the back burner for a couple of weeks just because of the holidays. We had a lot of scheduling conflicts. I'm going to move it back to Thursday. We tried putting it on Sunday, but I think Thursday night at 6 o'clock is where I'd like to leave it. And we're going to have a kind of a more structured approach. We're each going to have our own little segment that we're going to share our information with you. It might be something like I'll share a tidbit on Cromford data, and but I don't want to spend a lot of time on that because I'm not the only agent in the Phoenix market regurgitating the Cromford data, so I don't want to bore people with. I already saw that on her channel. And Pat, you'll continue to give us the what's going on with rates and where it's trending. Did we break out? Do we see any indication of a trend changing? And then Jackie and Ruby, they may come in and say something like, well, here's what we see right now in the new build communities. Here's what's going on with, you know, upper end. And so each week we'll have different segments that you can count on that we can give you updates on. So I hope you'll tune in for that. And finally, we are going to reintroduce the buyer closing cost credit for YouTube subscribers. It'll just be a flat $500 um, if you list or buy with. I'm going to come up with something for people to sell and incentives. So give me a couple weeks to think about that, or maybe a couple hours. But we're going to relaunch the $500 credit. If you're a subscriber and you reach out to us to ask us to help you purchase a home, we'll immediately credit you $500 on your closing costs. And no matter the price of the house. Now, the buyer commission has to be above 2.5. So if a seller's only offering 1 or 2%, then no, the $500 will not be there. But I thought it was time to go ahead and kick that one back in again. So we're going to have fun in 2023. And I plan on doing a lot more interviews here too, especially around the topic of water. I think it's time to address that one again.
Yeah, I mean, you saw Rio Verde. They're giving Scottsdale's giving Rio Verde some hell. It's like I don't know what's going on there. I saw that the other day.
No water after Sunday. Done.
Yeah, that's just
And
Christ.
so I didn't realize they have a pipe. It goes to Rio Verde foothills. Evidently not all of Rio Verde, but they have a pipe up there that the water trucks go to and hook up to, and they pay to get this water from Scottsdale. And then they truck it into the people at Rio Verde foothills. And the issue is Scottsdale's providing that water, but they don't get it back. So it doesn't go through the normal system like it would in a sewage system. It just goes in the dirt and disappears, eventually ends up in the aquifers. But there's also a huge development coming out in the Buckeye area that is enormous. And there's concerns, and people are starting to really talk now about, you can't rely on groundwater. We're already cutting back 21% from the Colorado River. And now we're saying, oh, well, we get 40% of our water from the aquifers. Well, they're starting to dry up, although you wouldn't know that out there this week.
Yeah, no kidding.
We're getting rain. Colorado's getting pounded with snow. Evidently, Lake Shasta is up about 4 feet.
Holy mackerel, no kidding. Wow.
Yeah.
Jesus.
Yeah, they're getting hammered. So, but the snow that we get up in the mountains here in Arizona doesn't really help us that much.
No.
It's the snow that you get in Colorado that comes down the Colorado River and helps fill our 2 reservoirs. And that's what we need. So those of you watching from Colorado, go out and do your snow dance. You have to take one for the team.
Exactly.
So next week, at the end of the week, we're expecting a jobs report, you said?
Yeah, jobs report. Now, there's not going to be a lot of news. Monday, we're closed. Obviously the market's closed, but, Barry's saying that we're going to see inflationary numbers starting to come down. So, I mean, yeah, this is, just a recap. I mean, this has been just one of those years you're like blank. You're like, man, what the hell happened? You saw rates going up. And, I mean, we saw rates low 3s, high 2s, low 3s. Now we were sitting at 7.25 this year. Now we're sitting at 6.25. I will say that every time we've seen rates come down, though, we've seen demand crop pick up. So there is some, elasticity there in terms of demand with rates. So, that gives me hope. There's a lot of things to be positive. There's a lot of things to be negative on. I mean, I think things are going to slow down. But if we can get more of an affordability, the rates will determine affordability in the short term. So if we can get rates in the 5% range, like Barry said, he feels we're going to see low single digit appreciation this year. Recession like slowdown, and just another really tight inventory. And maybe we just have another year of this muddling around.
You go back and you look at the predictions that everybody has said about real estate in 2023. They're not even close.
Yeah.
I mean, it's all over the, so I'm not even going to try. It's one says up 4%, down 10%. They're all over the place. But I know the one thing that you can probably count on is that, if we're sitting here at 1,472 contracts over a 7-day period, I don't know how we can get much slower than that.
Yeah. Yeah.
I mean, that's pretty slow. And the list pricing that we have hasn't moved. So January, February, something's got to bust out.
Mm-hmm.
And it could be, and I know that I surveyed people on this channel about inventory, and there's pretty much the majority of the people feels we will easily be between 20,000 and 25,000. I think about 40 to 50% of you felt that that's the number we would probably see in listings. And I think that's true, but I don't think it's going to suddenly pop. I don't think second week of January, bam, here we come. Because we'll start seeing it this week if it shows up in coming soon. And right now, our coming soon listings out there are, it's hardly a, an error on the rounding sheet. I mean, it's only, I think, 390 homes, something like that. So there isn't a lot that's in the pipeline getting ready to fly out at us. So I don't know what it's going to be, but it's going to be fun to watch it.
Well, you look at where we're sitting now and going into January, and where we were sitting last year in December going into January. It's totally different picture. It changed.
Yeah.
It's changed dramatically.
Yeah. In fact, as a reminder, here's this is our inventory. So last year, here we are, right? 5,201 homes. Today, we have 17,442. 5,000 homes.
5,000
It
homes last year.
got down to 4,600 in February. So, gee, I wonder why prices went up. And then look when it started coming up, April. This is when the rate increase came. People go, well, I guess I should sell. And when up here, when you got the 13,000 between here and here, this just happened over a 6-week period. That's where the alarm bells went off. Said, I better get my home on the market. So people did, and now they're just holding back. They're just not selling. So I don't know. I don't know how long they're going to sit on their hands. They may be able to sit this out for a year and a half, because a year and a half in real estate is not a long time unless you've lost your
really
job.
isn't. No, I mean, look at a year. A year goes by quick. Yeah.
Yeah. Yeah. So,
I mean,
well, Pat, I hope you have a safe New Year's. Do
Yep.
anything exciting? Watching football games?
I got a house party to go to. I'm going to the Fiesta Bowl tomorrow. So, my Michigan's playing, but yeah, I'm going to the Fiesta Bowl and then have a house party. So I'm gonna take it easy. I'm past the days of waking up with the underwear over my face.
Yeah, we're glad about that.
And upside down in a pool of just spilled beer. And I'm past those days.
Yeah, I'm long past those days. What I can't keep track of is the names of all these bowl games.
I know.
Like the Cheez-It Bowl, the fixed rate bowl. I don't even know what city they're playing in. I love that we just had Sugar Bowl, Cotton Bowl, Rose Bowl, right? And now, do we have a Cotton Bowl anymore?
Oh yeah, there's Cotton Bowl.
There's still a Cotton Bowl. So these other ones are just additions then.
Yeah.
So
yeah, Tyler, I used to have I did actually buy a pair of pink ones from Sheriff Joe. He had a charity. I bought a pair of. I had a pair of pink ones for a while.
Hopefully they're still in the drawer. So
yeah, they are. They are.
All right. Well, everybody.
All right, buddy. Well, thanks a lot. I want to thank everybody for. I just personally want to thank everybody for watching. I mean, the millions of viewers. I mean, it's we try to do our best. I mean, not to get sentimental, but I really appreciate people chiming in and their interest watching us, and we try to. I do have a tendency to jump around, but like you said, there's the train. The train does go around this little head here, and it doesn't stop at every station once in a while. But try to give my information, and I know you give some great information to people, and like I said, we're not trying to spin it any way, that we have. It just here it is. Let's try to make some sense of it and go forward.
Yep, this live audience getting to recognize names on here has really been fun over the course of the years. So I hope it can continue. So have a great one, my friend.
Happy New Year, everybody. Be safe. Take care.
Betcha.
Bye-bye.